Welcome, traders. Due to some personal reasons and engagements, uh, I was not able to upload or update the market sentiment and web nature of the market for almost 1 month. And finally, I'm back and let's indulge into the fascinating market structure. See, we have already discussed that the market is in corrective mode, and if you can recall that we expected that since this is these all of these moves are three waves only, so we had expected that market may plunge another low, which is deeper one, right? That we have expected, keeping in mind that we had considered earlier that this is the end of the impulse wave starting from here, right? Starting from here, this is 1, 2, 3, 4, and 5, which we had marked earlier. But now, since market is changing its dynamics, we have to change with the market, otherwise we'll be kicked out, right? So in this case, see, we have expected a decline from this level and market declined but reversed fiercely, right? So in this scenario, the count is actually, this is 1, 2, this whole is the part of wave 3, and this is a flat correction. See, this is a very, very time consuming correction. So this is a flat correction, and this is the last wave of this impulse, which has started from this low of 21,743, right? So again, we are assuming these as our primary view, right? Since these move from this level 24,587, this move actually till now looks impulsive, okay? Until and unless we'll discuss about this move very soon. But before that, let's understand this correction, right? So what about this correction? So this is W wave ABC first. Second, this is again a three-wave move. So this is X wave, and now this is an expanded flat correction, okay, to end the Y wave, right? So for expanded flat correction, we measure this move, the retracement of this level. Expanded flat can reach up to 1.32%, and see exactly from this level. See, I am marking this level now. Exactly from this level, market given an impulsive decline. And when we observe that this is creating an ending diagonal, we have assumed that this correction has ended here, and we have given the wave 4 here, and wave 5 is in progress, right? Now see, wave 5 comes in impulsive manner or in the form of an ending diagonal. But see, this is not looking like an ending diagonal because this is highly impulsive. See, now we will analyze these move for our current purpose. So what? Okay, for before that, let's first calculate the, if it is wave 4 and wave 5 in progress, where wave 5 can stop. Okay, so expected resistance area. So let's, for that, we'll take the length of first 0 to third wave and then meet it up with the low of wave 4 and see, I have marked this level 26,082 and market reacted heavily from here till now. We'll talk about this decline and also about this impulse. But what is the expected resistance level? Say this is the expected resistance level is 26,100 to 26,500. Okay, 550, right? See, I've marked it 26,081 to 26,537. So this is the expected area for the completion of wave 5. And you may have noticed that in these impulsive up move, the volume hasn't risen and not a good movement in stocks we have seen. Rather, we have seen a good amount of selling in stocks or in the broader market, right? And see, this is the character of wave 5. In wave 5, price moves up, but the volume decreases because after 1, 2, 3, 4, 5, a bigger ABC decline should pursue, okay, which should take the price minimum to the wave 4 level. So this is again our expected support area if these move has stopped here. Now the question is, has it stopped here? Is it the end of wave 5 or one more high is still there? For this, we'll analyze these up move. Okay, let's do that. To do that, see from here, this is 1, 2, 3, 4, and 5, and ABC. So we are marking it 1, 2. Now, see, this is the part of wave 3, wave 4, and wave 5 should follow, right? This is our primary expectation. Okay. Now, what is the minimum target of wave 3? See, the minimum target of wave 3 is 1.618% of wave 1, which the price hasn't achieved yet. Okay. So 1.618 is standing at 26,265 level. If price reached here and declined from here, then we could have assumed that this may be wave 3, wave 4 is in progress and one more high is there. But that doesn't mean that it always has to go 1.618%. It may not. Okay. So this is not any hard rule in relative theory. So you're assuming that this is wave 1, wave 2, wave 3. So wave 4, since these wave 2, observe here, these wave 2 didn't retraced 0.32%. So this is very shallow retracement for wave 2. Wave 2 generally retraces 50 to 61.8%. Since this is a shallow retracement, we expect a deeper retracement in wave 4, or at least much more time it will consume. So we have expected from these corrections, see this is a simple zigzag correction, ABC. So we are expecting a complex one or a flat correction, which takes much more time to complete. Okay. So in this case, what should be the retracement level or support area, see, the support area should look like here, right? 38.2% is the minimal support area for wave 4. And since we are expecting a deeper correction, so we may allow up to 25,580, right? So this is our expected support zone for the market. So let's mark it our immediate support zone if market wants to go higher, right? So this is our expected support area. Fine. So from here, one can plan along with strict stop loss here. Very, very small and logical stop loss. You can calculate what should be your logical stop loss, but the invalidation level for waves is coming here. Because wave 4 cannot enter wave 1, right? Unless and otherwise, it is an ending diagonal, which may develop, but for now, we can't assume because it is looking impulsive in nature, right? Fine. Now, our expected support is 25,700 to 25,580 or 581, something like that. Okay, so from here, market may reverse and finally reach the expected this one. Okay. Fine. So from here, one can plan a good short, and I am giving you a date. Actually, the date is coming on 4th November. Is a very important cycle date which can turn the market. So we are expecting price to reach here in this date so that we can enter a short position in a very good risk reward zone. Okay. So we are expecting this, and let's see what market may give us. Now see this correction, if we analyze this one, see this is A, this is A, B, C, B, and this is impulsive wave C. So what is the projection here for this C wave? Let's do that also, so that we can make our zone much more precise. So for flats, the maximum tolerance is allowed is 1.236 to 1.382%, which is in our calculated zone. So I am expecting price to, take support from this zone only. This is a very good risk reward zone to go long for one more high. Okay. And since wave 3 is normal, so wave 5 can also extend. So we can take benefit of this extension. Okay. And the move should come very fast. But if price breaks this zone with fast manner, then we have to consider this wave low as our invalidation level. Until and otherwise this low is not taken out, we cannot enter a short trade because these moves are not looking impulsive. Okay. If it is the end of the bigger 1, 2, 3, 4, 5, then these move should be very, very fast and impulsive. And also see this TCS chart. I'm going to show you. Yeah. See, for TCS or in IT stocks, in IT index, see this is the decline of TCS. So 1, 2, 3, 4, and 5. And so we expect an ABC up move. So if TCS gives an ABC up move, then the index must rise. Okay. So in every case, I am not seeing a fast decline at this moment. Rather, I expect one more high and very fast up move, which may give our wave 5 target and also may give us a very good sorting opportunity. So that's all. Have a good time and trade safe. We'll be back in next video where we will discuss about some other broader markets, that is what's going on in gold or in Bitcoin. And if you request any kind of market that you want to follow, then we can make a video for that also. Thank you, everybody.